Hello and welcome. I hope that you are having a fantastic day. Today we're going to talk about U.S. Marshals are going to auction off $40 million in Bitcoin. We're going to look at what is DeFi. And finally, we're going to talk about a new Twitter Bitcoin emoji. So let's get into it. Our cat Blue is reaching out to new subscribers. Subscribe today to get added to Blue's list. Now, I need you to know I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You are smarter than you realize. Do not trust what I say. Do your own research. And that's always an important thing, no matter who you're getting information from on the internet. Do your own research. Check it out. Dig into it a little bit deeper, because you'll find that there's lots of different perspectives. So, in this article from CoinDesk, U.S. Marshals are auctioning off $40 million in Bitcoin, and that's happening this month. The U.S. Marshals Service is auctioning nearly $40 million in Bitcoin, the first such auction since the end of 2018. The Marshals will auction approximately 4,040 Bitcoin worth $37.7 million at press time, according to CoinDesk's Bitcoin Price Index, to registered bidders on February 18th, that's February 18th, 2020. The press release said, and potential bidders must register by February 12th. So the potential bidders must put up $200,000 deposit before they're even able to make a bid on the Bitcoin. So if you have $200,000 that you can deposit, this might be a good auction for you, depending on what the final price is. I've never been involved in any of these kinds of auctions before, but I have heard stories of the results of some of these auctions for cryptocurrency through the United States government, and in some cases, people were purchasing Bitcoin at fractions on the dollar, so much, much less than if you were to buy it in the open market. And so if you have the money to be able to put up for it, it might be a good idea to get registered for the auction. Now, you may be asking, well, how in the world, if Bitcoin is anonymous, did the U.S. Marshals seize $40 million worth of Bitcoin? And the way that, one of the things, there's this story in the media how Bitcoin and cryptocurrency is used by people doing drugs or for illegal activities, all kinds of different illegal activities. And what people don't understand is that because Bitcoin's blockchain, you can read, if you know the address, if you have a specific cryptocurrency address, you can read all of the incoming transactions and all of the outgoing transactions. And so different government entities have been relying on a company called Chainalysis. This is a report from Chainalysis, and Chainalysis produces information that's used by everybody from the IRS to criminal investigations and so on, in order to find people who are committing crimes using Bitcoin and other cryptocurrencies. And Chainalysis put out a 2020 State of Crypto Crime Index. It's actually a report. I'll provide a link to this report. I've only briefly looked at it, but it actually, some of the information I found in it is quite interesting. The main thing that I want to share out of this report is this chart here. So people claim how Bitcoin and cryptocurrency is used by people doing illicit or illegal activities. But the interesting thing, the thing that I thought was interesting, is that out of all of the hundreds of millions of transactions of Bitcoin that happen every single year, the percentage of those, at least according to Chainalysis' research, the percentage of those that are actually involved in illegal or illicit activity is actually pretty small. For 2017, they estimate that 0.5% of all transactions were actually illegal or illicit. 2019, we see a surge up, but it's still slightly over 1% of all transactions. And so that's really not very much. Now, I have no idea how much the US dollar gets used in illegal or illicit transactions, but I do know for certain that the dollar amount of money that's used for illegal / illicit transactions when it comes to cash, US dollar cash versus Bitcoin, is dramatically higher. And so people say, oh, you shouldn't use Bitcoin because people are using it for illegal things. But on the flip side, they use cash every day for illegal things, and we don't think twice about using the US dollar to do transaction with. So I don't think that's a good argument when it comes to Bitcoin and cryptocurrency, especially when you realize that the percentages have been ranging on an annual basis from under 0.5% to just slightly more than 1%. That's a very low percentage of the amount of transactions that are out there that were actually used for illegal or illicit purposes. So the next thing we're going to talk about is, what is DeFi? What is DeFi? DeFi is decentralized finance. And the thing about decentralized finance, when you think of going to a bank to get a loan, we consider a bank a centralized or a single place that manages that money. And then the people at the bank are the ones that make the decision on who's going to get a loan. They have certain criteria. They'll look at credit reports and a host of other criterias in order to make those loan decisions. But ultimately, it is centralized because there is a central entity, the bank, that makes those decisions and handles it. Whereas with cryptocurrency, it's decentralized in the sense that it's not a central entity or a centralized person, but rather a large community along with a program that's actually making those decisions. And so with DeFi, how it actually works is decentralized or DeFi loans. Somebody takes a certain amount of their cryptocurrency and they deposit it into a specific application. On that application, there's what's called smart contracts, and those smart contracts lock up that deposit of revenue, those cryptocurrencies, for a very specific period of time. And while those cryptocurrencies are locked so that the owner can't spend them elsewhere, then that amount of cryptocurrency can be used by other people to take out loans. And so the person who allowed their cryptocurrency to be locked up earns interest, and the person who needed a loan gets to borrow that cryptocurrency and then at a later date pays back the cryptocurrency. And so it works out for both sides of the equation. A person can get a loan because they live in an area that banks are very difficult to deal with, or banks just don't give out loans, or they're looking for a small dollar amount loans and banks don't loan those dollar amounts. It's primarily used in countries where the banking systems are not like they are in the United States and they're difficult to deal with. And it's good for the people who have cryptocurrency assets, because not only do they earn money because their cryptocurrency could have gone up in price. Now, of course, if the cryptocurrency goes down in price, then they would lose money, but they're also gaining interest. And if they had converted their cryptocurrency into a stable coin, a stable cryptocurrency coin that maintains, say, a $1 value for each coin and never goes up or goes down, then in the case of a stable coin, you have much less volatility in the price of the cryptocurrency, plus you're gaining interest payments by loaning out your cryptocurrency. And so DeFi is the beginning of a peer-to-peer meaning a single person can put up collateral or put up cryptocurrency and have it loaned out to another person. So it's a peer-to-peer network rather than a centralized network. Peer-to-peer electronic financial structure leveraging cryptographic assets and blockchains to issue, trade, and hold financial assets. Building on the fundamental qualities of blockchain, DeFi applications would have three main characteristics. And the first one is easy access. So with the different DeFi apps out there, it's a system that is open to anyone via the internet so that capital can flow freely around the globe. And that's a great example, because you might live in the United States, but you're loaning money, loaning cryptocurrency to somebody that lives in Venezuela. And in Venezuela, because of the things that are going on with their economy and with their banking system, it's not as easy for people to get loans, or maybe somebody in Africa or somebody in another part of the world. And so it creates this decentralized, available to anyone that has like a smartphone or a computer, a laptop. And so it's pretty remarkable that, you could be loaning cryptocurrency to somebody all the way around the other side of the world, and they can borrow it from you, and then they'll pay it back with interest. So pretty crazy. Interoperable. This is point number 2 of the 3 main characteristics. So it's interoperable, a critical building block to making interaction between blockchains simple and creating an ecosystem that can scale and become more sophisticated over time. And so really what they're talking about here is the ability for that particular app to trade with different cryptocurrencies. And so you might deposit a stable coin, such as Tether or DAI, and the person could borrow Ether or Ethereum or some other cryptocurrency. So they're talking about interoperability. Now, there's a lot of cryptocurrency apps out there that don't have that kind of interoperability, but they are doing a significant volume in DeFi financial loans and investments. The last is transparent. Transparent is the third main characteristic that this article talks about. Transparent. While privacy should be preserved, data about market activities should be visible on an equal basis to all participants. And so the transparency that they're talking about is a built-in functionality of blockchain, unless you're using a privacy coin. So if you're talking about Bitcoin or one of the other major cryptocurrencies, most of them are transparent, and you can definitely go out and see what is happening in the market. All the transactions are visible for everybody to look at, and it's done on an equal basis to not only participants but non-participants. So you don't necessarily have to be participating in it to see what's going on the blockchain. Now, they've done this in a way that the privacy of the person is preserved. Said in another way, when you go to these DeFi apps, the DeFi app itself will contain the personal information of the person taking out the loan, the personal information of the person that's putting up the cryptocurrency as collateral, but that information is not put on the blockchain where it can be seen by everybody. That information is being maintained by whoever developed the particular app we're talking about. And so each app is going to have a different way of storing and protecting that information. And if you want to find out more about the privacy of a particular app, you'll have to go to that specific app and dig into the information available about that particular app. And so this gives you kind of a brief overview of what is DeFi, or decentralized finance. If you're interested in getting a cryptocurrency loan or earning interest on your cryptocurrency, decentralized finance might be a great way for you to do such a thing. The final thing we want to talk about today is Jack Dorsey enables a Bitcoin emoji on Twitter posts. And so if you go to Twitter and you put in hashtag Bitcoin, you're going to see this orange bee just after it. And that is the new Twitter emoji that people are raving about, people are quite excited about. So if you use Twitter at all, you can actually throw up your own Bitcoin, hashtag Bitcoin, and it's going to get tagged with that Bitcoin emoji automatically. As soon as you post the Twitter feed, as soon as you post your Twitter comment, that emoji automatically gets added to it. So kind of cool. I thought it was interesting. So the final thing is how can I be of service to you? Did I say anything that I needed to explain in better detail? Did I say anything that was confusing? Or do you disagree with anything that I said? I'm interested in hearing your polite disagreements, because you know things I don't know. I know things that you don't know. And when we get together and share that information, even if it's information that we disagree with, we're both going to grow smarter together. And that's one of the reasons why I'm here and doing these videos. I want to help you grow smarter, and I'm interested in learning from you and growing smarter myself. In fact, doing the videos is one of the ways that I grow smarter, because in order to put together the information I present, I end up learning more about whatever that topic is that I'm covering for that particular video. And so the videos themselves are a great way for me to learn more and grow smarter about this crazy world of internet money. In the meantime, I hope that you'll like, subscribe, and hodl. Have a fantastic day. Bye-bye.